have enough casualties to deal with. Look at SBI Card and pre-open, 6% higher. Gaurav pointed this out, that instead of falling, as the management was guiding that their credit costs were supposed to taper off, suddenly they've risen. They've risen to a multi-quarter high. Market doesn't like any concept of asset quality issues. Flip this with Kotak Mahindra Bank. Kotak Mahindra Bank is down still 5%. And the others as well, Bank of Baroda as well, because there are lots of ifs and buts in all the numbers. Even if loan growth is good, there's an if coming in terms of either margins or asset quality. That's the problem with the weekend bank numbers. Let's discuss this and more with Shweta Daptardar, Vice President NBFCs at Elara Securities. Shweta, we'll talk about NBFCs and Shriram in just a bit. But just first, a word on the banks, because now Kotak has come out of the blue as well. This rise in credit costs and, the sharper, margin compression as well. Your thoughts?
Yes, Survi, morning. So it's been a little tough week for the entire BFSI space. So yes, Kotak Mahindra Bank uncharacteristically has put out a very soft quarter. Largely, the slippages have emerged from the MFI and CV side. But if you, it's a compounding story. It's a long-term story. Is what we believe. The balance sheet is still capable to absorb the overall softness that we saw and still put up a 2% ROA. So we have an accumulate rating, but yes, industry-wide, certain pockets, the stress signals are definitely pretty pronounced.
Okay, so your rating is accumulate on Kotak Mahindra. Very quickly, SBI Card, that's the other big disappointment, right? We thought things are improving and everybody was saying how unsecured stress is now ending. Well, not showing up in the numbers.
Yes, definitely. So SBI Card was a disappointment. And we also have to come to the terms to the fact that it's not just the credit quality or credit risk led challenges, but this time around we saw the shift is now towards business augmentation impediments. So while management has revised downwards, the guidance also on new cards addition. So apparently the quarterly run rate was 1.1 million. Now it's down to 0.9 million. Juxtapose that with also the loan receivables growth, which used to be around 12 to 14%, that is down to 10 to 12%. And as you rightly pointed out, the elevated credit cost, which is 60 bips higher just in a span of 3 months. So yes, definitely the signals are poor, but we also have to understand that this is also the part of customer cohort of 2023-2024 portfolio, wherein the concerns are still lingering and that is impacting the asset quality. Also, the new portfolio formation, which is aligning with the desirable behavior, that is still not a significant portion of the overall loans. So definitely that positive impact will come with a lag. So in the interims, yes, the stock will remain under pressure.
And Shweta, very quickly, Shriram Finance, let's talk about some good as well, because at least I think their credit cost issues are controlled. But this whole margin compression, I know that it's something to do with the excess liquidity that they're holding. The management is saying margins will normalize. It will come back to 8.5%. Would you go with that? Would you believe that?
Yes, definitely we believe that, and margin pressures partially has also been the result of the higher liquidity on the balance sheet, which is leading to negative carry, and therefore that is leading to the softer margins. But there is another aspect to it. See, larger part of uh, uh, book of Shriram Finance is vehicle finance book, which is fixed rate book. So it's not agile enough and does not react positively to the rate cut scenario. But yes, definitely, second half augurs well. They have been focusing on the lending side on smaller tenure portfolios such as gold loans, SMEs. So accordingly, the liability side will also turn sooner or later nimble enough to show some margin improvement. So yes, second half will be definitely better than first half. The margins is definitely not a concern. In fact, Sriram commentary has also been steady and stable amidst a lot of negative noise. But we do believe there are certain pockets showing pressures on MSME finance in entry level CV segment and of course credit card space.
All right. Shweta, thank you very much. Good speaking with you. Appreciate your time here and those insights as far as these financials are concerned.